Amazing. Thank you so much for joining me, Taimur. For everyone that's watching, do you want to kind of introduce who you are and what we're going to be speaking about today?
Sure. My name is Taimur Ghafoor. I'm one of the accountants here at Osome UK. I am a qualified accountant, and my job is to make sure that the e-commerce platforms and our services are aligned and we have the automated system in place. So I go out and figure out how the online platforms and different countries and different platforms in different countries work, and how we can bring the financial information from those online platforms to your accounting software and produce your automated reporting systems so that you can make better decisions for your business. And I work for a company, Awesome, as I mentioned, which is an online accounting providers, and they do everything paperless through these automated system, which helps you navigate through your bookkeeping and accounting and tax as a free fall without intervening too much of your own time.
Amazing, thank you. So a little bit of an overview as to what we're doing in today's live. We are going to be answering some questions that people sent in over on Instagram, Twitter, TikTok over the last week or so. And if anyone does have any questions, this is live. So if you want to drop a little comment in the live chat, then we can answer them as we go. But we will get started if you're ready to kind of get into it, and we'll go through the questions.
Yeah, let's go for it.
Yeah, amazing. So I think something that a lot of people have had questions about is, you know, when it comes to taxes, running your business, that sort of thing. So when it comes to taxes, how do you kind of know from a sole trader point of view how much tax you need to pay?
Look, as a sole trader, things are slightly more simpler and easier. Not the easiest, but it's a lot better than a limited company because there's a lot of paperwork and working that goes behind a limited company compared to a sole trader. So what you need to do is simply understand how the tax system works. So any earnings, any money that you have earned between a period of April 6th and the next year's April 5th, which is 12 months period, you will need to declare the sales minus the expenses, and whatever your net profit is, you pay tax on it. And again, you pay tax on next year on 31st of January. So understand how the period works from April to April. Understand how much you have made through your basic bookkeeping and your accountant's help, and see all of the expenses that you can deduct from it. And then the last figure is that I've mentioned, the net profit. You pay 20% and national insurance on it. So it's quite a simple and straightforward method. But when you're actually doing the numbers is where the complication comes in, and you need to figure out how it actually looks for your specific business.
Brilliant. So one of the questions that we got was, if you're registered as a sole trader, but you also have another job, so say you're registered as a sole trader and it's kind of like a side hustle or a side business, how do you go about calculating the tax that you pay if you're already paying tax in your full-time job?
Okay, so again, a salary tax is different compared to the tax you pay through sole trader. So salary tax is taxed on spot. So when you receive your salary on monthly basis or whatever intervals you have on your salary, you get the money after all of the tax has been deducted from your pay. You only get the net figure. So which means you've already paid tax on your salary. Whereas the sole trader, you are collecting all of the money, you're getting all of the sales, running the expenses, and at the end, when you get the figure, you pay tax on it. So the timing of the tax is different. But what happens is, at the end of the year, when 31st of January comes, all of it will be accumulated all together. So an accountant will check what your salary was and how much you earned through your sole trader, and do a final calculation combining them together. Remember, every individual in UK gets £12,500 as tax-free allowance, and that includes towards all of your overall income, which includes your salary and your sole trader income as well. So anything above that, you will pay tax. For salary, you have already paid through your monthly payroll, and for sole trader, you will pay through your sole trader calculations at the end of the year.
Brilliant. I think that makes sense. So another one kind of similar is, if you are doing your first tax return and you're doing it on your own without the help of an accountant, are there any kind of like tips that you can give so that people don't make mistakes?
I think self-assessment is a lot simpler and easier than limited company when it comes to filing the tax return. So just make sure that when you're running the business, you keep everything in place. So use as limited and less bank accounts you can. Don't mingle personal transactions too much. Keep your business transactions separate. So what you do is at the end of the year, you sit down and go through the bank transactions and make sure you categorize them properly. So all of the sales goes into sales and all of the expenses goes into expenses. When you're doing self-assessment, you get a form to fill, and in that form you need to fill these categorized sums basically. So find yourself an accounting software. If you're too small at the moment, then just do it on Excel sheet. Do this categorization. Keep all of your invoices safe so that you can actually check how to treat those expenses. And then yes, try to see if you can make your way around the form and then fill that and make the payments. But again, it's always good to get some professional advice, not because I'm an accountant, but also because there are quite a few complications to it. So for example, if you made more than £1,000 in a tax, you then have to do payment on account on 31st of July, and it becomes slightly more complicated. What does payment on account means? How does it work? And where does that extra money go? All of these questions you can be answered by an expert. So if you don't want to hire someone on regular basis, just get some consultation so that you're in the right place.
Brilliant. I think we just got a live question to say what happens if you miss the tax return deadline. And I guess that's probably a good point now to kind of, if you could go over what those tax deadlines are as well.
Sure. As I mentioned, so for every different type of business structure, the deadlines are very different. Payroll, for example, as I said, the tax needs to be paid before you get the salary, so it's on spot. Whereas for sole trader, any money that you earn between an April to April of a year, your deadline is 31st of January of the next year. So, for example, if you started a business on April 6th of April 2021, and your year end will be 5th of April 2022. The deadline for this period will be 31st of January 2023. So you have a long period to get your account submitted. um, for limited companies, completely different. It's based on when you incorporate the business and when it actually works. But to answer Hannah's question, what happens if you miss a deadline? um, it's like any other deadline. When you miss a deadline, there are fines, there are penalties, there are warnings. So with this deadline, initially you will get about, I think, £200 worth of penalties and then interest on top of it, with some warnings. But again, you can always dispute that if there was a good genuine reason. But yeah, if you miss a deadline, you will face those penalties and fines.
Brilliant. Just a reminder to anyone who's tuning in, thank you guys for tuning in already. If you do have any questions throughout the stream, then just drop us a comment and we will be sure to answer that. The next question we've got here is, at what point do you have to pay tax or declare your sole trader earnings? So I guess I'm reading into that as in, like, how much do you need to be earning before you then need to register and do your self-assessment and stuff like that as a sole trader?
So the threshold is £1,000 in revenue. So it's a very small threshold, but again, you get a bit of a testing ground here. So if you started selling something, and again, remember that the main headline of it is April to April, 6th of April to 5th of April. That's the time period, and in that time period, if you made more than £1,000 in revenue, you are then eligible to, or you have to, on compliance basis, register for sole trader, and do your self-assessment. Again, remember the registration deadline is 5th of October of that current year. But yeah, those are your deadlines, and after £1,000, you now need to register for sole trader.
Amazing. And then, so when, obviously I'm a service-based business, I'm a freelancer. So if you are coming from a background where you are more product-based, maybe an e-commerce business, at what point would you recommend getting an accountant, or is it kind of plausible to do it yourself?
Again, regardless of which type of business you are, you should get an accountant if you think your business is going to pick up and you will need an accountant do your books and submit your accounts. So there's a bit of a misconception. People wait up until their year end and where the tax is almost about to be due, and then they get an accountant. What happens at that period is you hire someone who will charge you premium for doing everything in one go in a very limited time period. They will not only charge you their normal accounting fees, but they will also charge you premium for doing all of this. Whereas if you get someone for on monthly basis, then there's no premium involved into it, and then you get a consultant or a partner with you throughout your whole journey. So you can pick a call, or you can like us, you can chat to us at any point in time and say, I'm confused about this, can you help me with this, can you help me with the tax treatment of this and that. So get that guidance on monthly basis, compared to just going it once a year. But when to actually hire someone, it's basically as soon as you think you are making good enough sales and you will need someone to help you with your taxes, that's the time to get an accountant.
Brilliant. So I've had two questions which I feel like kind of link together, and we can kind of talk a little bit more about Osome and the services you guys provide. One of which was, can you recommend any bookkeeping softwares? Obviously, we can kind of get onto that. But also it was, how do we go about having a one-to-one with an Osome accountant? So do you want to talk a little bit about how you guys offer those services?
Sure. So look, bookkeeping softwares, obviously, I can only advocate our own company. We are great at it. We are automating the whole bookkeeping side of things. We are changing, the way bookkeeping used to work compared to what it is now. So it's a very simple, straightforward process. Our mission statement and our aim is to help business owners, and especially young starting business owners, to ease up their time, and for us to take all of the bookkeeping on our heads. So yeah, Osome is probably a great place to start, and our pricing are really competitive, so you don't have to worry too much about it. And in terms of getting in touch with your accountant or consulting it, we have created this chat system which is like WhatsApp. So rather than waiting days, weeks for your next appointment with your accountant, we provide you this chat system where we have promised you that anytime you send us a message, we will get back to you within 24 hours. And it's very informal. It's literally on your mobile app, or you can log in through your website and you can just speak to us through a chat system, and your accountant and your assistant accountant are literally at your fingertips.
Brilliant. Brilliant. Hopefully that answers people's questions. We have linked Osome and their services in the description if you do want to check them out, which I recommend. Definitely check them out. So back to the questions that we've been sent in like previously. One here is, as a freelancer, what are the actual chances of ever getting audited?
I think apart from the IR35 rules, the audit is now there are two types of audit. There's an accounting audit and there's a tax audit, which is like HMRC knocking at doors for investigation purposes, right? So the accounting audit is only done on big companies, and they have to legally do it on regular basis. Whereas the tax investigation, where you can get a random knock on your door and it's a tax officers, that can happen to anyone at any point. Again, it's very randomized. There's no specific rules and regulation to it, but I have seen that a small consultant who's starting, and it's not gone into hundreds, thousand. It's very rare for them to get this. It's normally where you're making a lot of sales, but you're not declaring as much VAT, especially, or you're making a lot of sales and your expenses are way too high. Then it triggers the system, and then investigation is sent over. But normally it's not for small individuals who are just starting on trading, basically, as a beginning.
Brilliant. Another question we've got is, how can I write off equipment? So I'm guessing, like, as a photographer, cameras and stuff like that, how do you write that off against your taxes?
So that's a good question. So equipments are taxable items, and you get, if it's relevant to your business, you get annual investment allowance, which covers equipments. So for example, if you buy a laptop, the full amount of the laptop can be expensed against your sales. If you're a photographer and you're using camera for it, or you're using camera for marketing purposes, again, your equipment can be used against those. So yeah, so those are taxable expenses, and you can claim your taxes against it.
Brilliant. This one I think is quite a good one, but quite maybe a broad one, so we might be able to talk about a lot. But how does VAT work?
Again, that's one of my favorite questions. Look, VAT is a very complicated but an interesting tax system that UK has. So it's a value added tax, which means anytime anyone consumes a goods or services has to pay tax, and the end consumer normally pays that tax. So what happens is that HMRC has said that business owners in the UK, whenever you're providing a good or service, you need to charge VAT on behalf of us. So you're collecting the money from your customers to be paid back to HMRC. Now, again, there are certain thresholds, so you only need to do this if you're making more than £85,000 in the last 12 years. But you can voluntary register as well, and sometimes voluntary register is more beneficial, because if you're making losses or you're selling 20 zero rated items, you can actually start claim money back from HMRC rather than paying them. But the essence of it is basically you collect money on behalf of HMRC, and then you are paying someone 20% VAT. So like if you get an accountant, you pay them VAT. If you're getting equipments, you pay VAT, and you can claim all of that back. And the difference of what you've collected and what you've paid is either goes back to HMRC, or you claim the money back from HMRC. But
Right.
that's the VAT system, and it includes a lot more things like import VAT and customs and all of that stuff. But it's a very big area.
Brilliant. This question is from someone who runs a small business as a sole trader. When should they, and should they at all, make themselves a limited company?
If you're just starting working on your basic ideas and trying to see how the world of business looks like, a sole trader is perfect for you. It's simpler, easier, and a lot less paperwork involved. But a limited company is more tax efficient. You can get family members involved into it. You can have shareholders who can take a part of your income and use their personal allowances, and these are all allowable taxable items. So it's something that HMRC themselves says that you're allowed to do this. So a limited company in a long run is more beneficial. A lot of investors, lenders will prefer a limited company over a sole trader. And one of the biggest advantages of a limited company is that for whatever reason, if you're not able to operate the business any further and you have borrowings, limited company provides you a protective shield. It does not let anyone come for you personally and your personal assets like your home and your car. Whereas a sole trader, if you end up defaulting and you don't have the money anymore, you are personally held responsible, and banks and stuff can actually come for your personal belongings. So they both have pros and cons for each. It depends at which part of your business you are, and then based on that make the decision.
Brilliant. To the people that have just joined in, if you want to add some more questions, then just shove them in the live stream chat and we will answer them as we go through. We've got a couple more to go through that have been sent in prior, but we will get around to answering any more questions. I think we've got one now. What's the difference between the two? I think that's between sole trader and limited company.
Yes, as I just explained, so the main difference is, as a sole trader, everything is on you. As an individual, you are the main face of the business, and whatever happens, you need to personally answer that question. Whereas a limited company, you create an entity that is separate from you, and that entity is now responsible for it, and you're at the back seat. Although you're the main person working for it, but all the accountability and liability lies with the limited company, as long as obviously there's no fraudulent activities on it. So that's one of the main difference. But with limited company, you have a lot more paperwork to do. You have a lot more declarations to do. You have to submit your accounts to company house. HMRC needs a different type of tax return with your balance sheet. Whereas a sole trader, it's just smooth, straightforward. You need to just fill a form and tell them your taxes, and it's done. But limited company, you can be more tax efficient, and you can do things that can help you reduce your tax. Whereas a sole trader is black and white. This is your tax rate, just pay this, and that's it. So those are pros and cons of both. As I said, depending on which part of your business you need to make a decision on which way to go.
So would you say like if you have two different kind of models of business, is there one that would favor being a sole trader over another? Or is
Sorry.
it so like if you had say for example service-based and product-based, would one favor being a sole trader over the other, or is it just about where you're at in terms of the growth of your business?
No, it purely depends on the growth of your business. When it comes to taxes, regardless of what you're paying and how you're recovering your money, like through service or product, you pay taxes based on how much you've earned, and that's the decision part. Where if it's sole trader, which is it more better, or if it's limited, better.
Brilliant. So the next couple of questions that we've got before we kind of open the floor again and see if anyone's got any more questions, they're quite similar. So the first one is, do you need to pay tax in other countries if you make money from their residence?
No. So, for example, if you're in the UK and you're selling goods into Europe, which is not a part of our free zone anymore, so again, different taxes work differently. So you will not pay any corporation tax or income tax because you pay that in the UK. But Europe has their own VAT system, and their conditions are: if you're a foreigner trading into Europe, you will need to register for VAT and pay VAT. But again, VAT is not something that you pay personally. You charge extra on top of your sales. So to answer your questions, you don't pay any tax yourself. Although you have to register for different types of tax on their country and charge on those bases. So, for example, in US they have something called sales tax. You need to meet those threshold, and then you start charging sales tax. But again, you don't pay any personal or corporation tax there.
Perfect. So you just kind of need to look into whichever country you're selling in and work it out based on that. Is that kind of the gist of it? Perfect. And this one is quite similar. So if, for example, you're paid in dollars or euros for goods or services, and you're in the UK, how do you claim this income?
Regardless of whichever income you're paid in, as long as the money is hitting your bank account in the UK, it will be converted into pounds, right? So, for example, if you invoice someone $500, when they send you the money that you receive in your bank account would be about 360 something. So you will record the 360 pounds as sales, and that's what you will pay tax on. Although you will the invoice that you raise will be in dollars, but when you use the accounting software, they convert it into pounds and then use the pound figure.
Perfect. So it's the conversion of the time of that sale or that payment that you're paying the tax on.
Agreed. Yes.
Perfect. Another question is, when you pay, so for example, if you get paid via PayPal in dollars and then there's a conversion fee that you pay into pound, what do you do in terms of that little bit of money? Is that an expense? Is that something that you just kind of absorb? What is that money?
That will be an expense. It will be treated as like a bank fees. So when you're doing a transaction and a bank charges you fees for it, especially when you're doing international charges, those are taxable expenses, and you can use that to reduce your sales.
Brilliant. Perfect. I think that's everything that we got previously. So we'll give a couple minutes just if anyone does have any final questions. But thank you so much for going through all that. I think we've covered quite a lot of different areas so far. So if anyone else has another question, then drop it in the description. If not, you can head to the link in the description. Sorry, I said description instead of live chat a minute ago. Yeah, drop your questions in the live chat and then click the link in the description if you want to head over and check out Osome. They have, the opportunity to speak to a dedicated accountant just like this. So if you do have more questions and you kind of want to have a little bit of a chat, then definitely head over and check them out. We also have a discount code, SOF100, so you can check out all of that information in the description. But if there's no more questions, then I think we will sign off for now. Yeah, perfect. Is there anything else you want to say? Any parting words?
No, look, thank you for having me. And again, if anyone has any questions, please feel free to get in touch. Refer Sophia's name, and you will get the £100 off that you mentioned. And now also you can book in consultation with that £100. that can help you, understand your business and any other taxation issues you have. But please feel free to get in touch.
Brilliant. Thank you so much.